Guys, so welcome again to my channel. It's the second video here. Um Today I'd like to start with some basics for you guys that don't understand shit. That's okay, we've all been there. Um yeah, if you're worried about anything like that, I'm gonna want to sell you some course or whatever, just watch the previous video. I explained everything there, how it's going to work here. mm, yeah, so not gonna take any longer and we can go to the explaining. So first of all, I think the most mm, it's the least advanced and the one of the most important things in technical analysis, in the trading, are support and resistance. Oh, by the way, these PDFs that I have here, guys, will be dropped down below in description. There will be a link to Google Drive, and just so you can study by yourself or whatever. So yeah, anyways, the most important one is support and resistance. Okay, so um yeah, maybe let's start with the definition. So as you can see, it's price level, a certain price level where buyers step in, and it prevents price from falling further. That's support, that's right here. As you can see, it we'll be looking at charts later, and I will be showing you examples on the on the spot. So yeah, as you can see, it supports it holds the price from falling down, as you can see. And basically that's usually that these are psychological levels, like 100,000 on Bitcoin or whatever. Yeah, so that's it. And the resistance is basically the same, but for it prevents price from going further up, of course. So yeah, as you can see here, how to identify. You just need to look repeated price bounces or rejections, like here. You can see bounce of the support here. And just use previous high and lows, swing points, and round numbers, like I said, like 100,000 or yeah, whatever. Here you have some tips. Support and resistance zones are rarely exact. Treat them as areas, and that's one thing that is pretty important here. Some people like draw lines, just simple one line. I prefer drawing like rectangles, because it doesn't say the exact price point where price is rejected or something like that, because it's never exact, it's never one point. Okay, as you can see here, price stopped on the top of it. Here it went even through. That's called liquidity grab, but we'll get to it in other videos. So yeah. And here, as you can see, it barely made through the end. So yeah. So yeah, it's never exact point. So I prefer using rectangles more than like single line or something like that. Yeah, and that's true. Actually, the more times price reacts, the stronger the level. So of course it's not for always. It's not indestructible. I don't know. You can eventually break it, right? So as you can see here, or even here, um yeah. So That's what what I wanted to say. Um, it combines with price action like pins or engulfing bars. So we're gonna talk about it in another videos also, because it's another subject. Okay, we are starting from the basics, so you get everything right. Yeah, you can do this. By the way, all these PDFs are made by me, so it's mine. You can do whatever you want with it. I won't be mad. I won't sue you or anyways, or anything like that. So yeah, you can do this demo, but you don't have to if you want. Really, I think it's pretty simple, so you don't have to. But I just did it for like these ambitious ones. Or if you didn't understand anything, you want to practice, I recommend it, of course, but it's not you don't need to do that actually. So yeah, you can watch, yeah, highlight on chart like I did with rectangles and color it. Mark like 3 or 4 maybe zones like this. And just watch the price approaching these zones with volume spike or candlestick confirmation. Actually, no, just watch the price for approaching these zones. Okay. We'll talk about volume spike or candlestick information in the later as well. So yeah. Oh, actually, we have volume here, and volume is what actually moves the market. Okay. So you can write down the definition somewhere in your notebook or something like that. Even a sheet of paper will be fine. Yeah. So the definition is volume is a number of contracts or shares traded in a period of time. Okay. So it's like you can think of it like volume as a noise, and the more noise on the market, the more people in the market trading is more noise. Okay, so the market moves, has bigger moves, or faster moves, and more, how do I say it, more impact. Okay. um yeah, that's basically the definition. Yeah, and it as I said, it indicates strength of a move. um Yeah, the key observations are high volume on a breakout. It's a strong confirmation. Low volume, so in like no trading zone. I mean, basically in like when you're trading like Asia session, and you trade like US dollar. Of course, it's not on the Asian session. It trades on New York session. So then you have low volume. Okay, if you trade in like Asia, a dollar, of course. But if you trade like silver or gold, it will be better at volume. Will be bigger at London session or even Asia session. So yeah, I hope you get it. Yeah, and fake out and breakout are, breakout is like here you can see breakout. Yeah, so the price breaks the support or resistance or as hill, and fake out is here. Okay, so price went through it and then came back. Okay. um so yeah. um yeah, you can do this demo. So you need to compare volume bars on chart during trend versus consolidation. And yeah, that's basically it. So here you have something about simple trend analysis. The definition is uptrend, higher highs and higher lows. downtrend, lower highs and lower lows. We'll get to that in a chart in a second, but yeah, I want to show it on chart because I think it will be easier for you guys to understand. But here you can see as well, so the higher high, maybe higher high is, oh no, here I actually have a downtrend. Okay, so downtrend is where price is going down, and lower low is basically here. As you can see, we have a low. Okay, so we have a low candle and then we have a high candle. I mean, what the fuck am I saying? Here you have a bearish candle, here you have bullish candle. Bullish is when it goes up and bearish is when it goes down, of course. So yeah, if you have a bearish candle here and next one you get a bullish candle, then this is your low. Okay, this point right here is your low, the wick of this bullish candle. So yeah, and then if that's your low, you're going to search for next low. So again, bearish candle, bullish candle, okay, or here bearish candle, bullish candle, and here is your low. You choose the lowest point of these two candles. Okay, so that's a low and that's a lower low because it's lower on the chart. Okay, yeah, and for higher highs and higher lows, it's basically like let's say here you have a high. Okay, it goes in the other direction usually, but or you know what, I show in the chart just in a second. Tools are EMA 20 and EMA 200 for trend directions. So basically these are like crossing averages, and these are lines that goes on the chart, and they are just, you know, showing you the price going up in a long term or going down. I mean, the EMA 200 is basically for like higher time frames, or the EMA 20 is like for lower time frames. Yeah, so whatever. Yeah, so here you get support and resistance zones for entries. Like, you know, you're going here. You see the price bounces off of it, then it goes up, then you set an order here, limit, or you enter with the market, whatever, and it goes up. Okay, so that's like basic strategy. Don't trade just off of it like a single piece. We'll get to strategies later. Okay, so practical tips are: trade with the trend, internal pullbacks near support or resistance. Okay. Avoid counter trades unless strong confirmation, like a volume spike or candlestick pattern. So basically, what is volume spike is, okay, you know what? Maybe I actually will I will actually show you that, guys, on chart. Okay, give me a second. Okay, so as you can see, here we are on chart, and what we have here, we are on silver dollar on a 50-minute time frame. So basically, here you can see I have indicator that this is actually, you can turn off and turn on all of them. As you can see here, I'll turn off turn on 20 and 50. No, it's 20 and 200. Okay, so this is 20, and you can see it's more like it's closer to the price. Okay, it moves not exactly, but it moves closer to the price. Okay, it follows the price more directly or whatever. And 201 is like more stale, okay? It like verifies the price more. Or I don't know how to explain to you guys, but you know what I mean. It's more. Mm, you can see that if basically if price is up above, I mean the EMA 200, it means we are in uptrend, and as you can see, that is true. And if it's above, I mean under the EMA 200, you can see that we are in a downtrend. Maybe I'll change time frame to like 4 hours. And as you can see, sorry for that shit. Okay. So as you can see here, or maybe not here, but shit. Of course, no example. Oh, here, see, the price went under and it fell. So yeah, that's it. It doesn't happen always. Basically, if you're under the 201, you don't want to trade longs, and when you're above it, you don't want to take shorts. Okay. So yeah, that's basically it. Okay, so what is maybe we'll start with like maybe we'll start with a support. Okay, so okay, that's pretty good example here. So as you can see, we have our support and resistance. I mean that's your resistance, and that is your support. Okay, I will tell you one thing that's pretty important in a moment, so I'll just color it. Shit. Okay, what's with the okay. Okay, so here is your support and here is your resistance. Actually, we can do it right here. Okay, so as you can see, the price is ranging between your resistance and your support, and here you have a fake out. That's the fake out. Okay, so price breaks out, but then immediately goes down, and that's a fake out because it breaks, but it doesn't follow. It doesn't have a follow through. So, but here, as you can see, this is a real breakout. Okay, here as well you have a fake out, and here you have a real breakout. Okay, so price breaks and it goes up. So that's pretty basic. It's not that hard to understand. I hope so. If you have any questions, of course, write it in the comments. I will talk about it in the next video. So yeah, what is volume spike now, you may ask? Okay, so go here in trading view, go in the indicators and just type volume, and you should have like not volume profile, but volume. I don't know if I have to type it in Polish. No. Or yeah, okay, so just type volume and you get it. So that's volume, okay? Some bars, some candles actually. Well, maybe they are not candles, but they are bars. And as you can see here, okay, here we have volume spike. Okay, so volume spike is like one candle, one bar actually, that is higher than the others. Okay, it's higher than the average. So as you can see here, oh, that's even better. It's not always that if the volume is higher, that the candle must be like very high or whatever. No, it just tells you that that the volume of sellers, or even no, actually no, the volume of traders here, okay, in this 15-minute candle were bigger than in the average, okay. So that's this candle. It's a bearish candle, and as you can see here, it's spiking up, and it's red, so it's bearish, and my bearish candle here is spiking down, so it's going down actually. Just that's what I wanted to say. So yeah, I hope you understand it. As I said, if you have any questions, just any kind of question, there's no sound like dumb question. Don't feel embarrassed. We've all been there. We've all went through it, and yeah, so just don't be embarrassed. Be yourself and ask a question. Be a man, grow a pair, and just enjoy this learning stage, because I miss it actually. It was a good time for me. Yeah, so that's it for now. And yeah, see you in the next video, guys.